Okay, as promised, we like to follow up on our free picks and how we traded them in our chat room. Foster Wheeler's what we sent out last night, FWLT. We liked the green day that it put in there after a pretty big sell-off. Okay, today it gapped up. I'm going to show you how typically we would handle that, and I have to word it that way because I was actually looking for something else at the time on a different stock, so I missed this one. But I'm still going to show you how, had I seen it, we would have handled it. And I do not know whether anybody in our chat room took this or not. But here, let me go into an intraday chart here using 5-minute candles. Actually, I'll go to a 2-day to show you. This is where it closed yesterday, and then you can see the gap up there today. Now I'm going to zoom in on just today. Formed one of our setups that we really like. Okay, you have consecutive consecutive lower highs on these 5-minute candles. So the way we would have called this had I seen it, I don't know if this helps at all, 28, but we always tell you we'll follow up and show you how we trade these. So even though I missed it, this is exactly what we would have called. 29, 23, the first break of a previous 5-minute candles high, after you have at least 3 consecutive candles lower, okay? And this one met all those parameters. So what you had here was a high, lower high, and a nice high volume on this candle here too. The high of this one was 29.22 right here, and its low 29.03. So you have about a 20-cent range candle. Okay, the way we would play this, the first time it breaks a previous 5's high. So 29.23 would have been the trigger. I know this sounds silly, but it would have been the trigger I would have called had I seen the 5's setup. Again, I was trading something else at the time. It's not to say that nobody got this, because we had a couple hundred members in chat, so we could have had some play it, but I didn't take a poll or anything. 29.23. Again, it won't be on our results page because I didn't catch this in real time, nor did I call it. And the stop would have either been 29.02 below the previous candle or below the trigger candle itself, which I am utilizing that more and more lately. When I do have a nice setup, I would have taken 29.23 with a stop below the trigger candle itself at 29.14. That's less than a dime risk that way. And from 29.23 shot straight up to 30. So a nice trade. Even if you waited and took the break of the early high, you still had a nice trade. So hopefully some of you made money on it. But as we always say, we're going to show you how we would have or traded it. Again, I did not catch this one, but it did give a nice, what we call a 5's setup. I'm going to show you a couple others that you'll see posted on the results page tonight, and I'm actually going to show you how we traded them. Whoops, to try to explain the setup, I mistyped it there. BEXP, Brigham Exploration. Let me go to the daily first. We added this to our list in the pre-market because of this gap up here. We knew it was going to open up here after a long base and a recent high of 1570. Okay, so the gap was on watch. Called it on one of our favorite setups after a gap up using 15-minute candles. We actually sent this out as an alert in our chat room. BEXP clean 15s, which means consecutive lower highs on 15s. 1488 was the buy price right there. This was announced in chat. Worst case stop below the trigger candle, 1475. That's only 13 cents risk. And from 1488, it did not stop out on 13 cents risk and shot up to 1580, almost $1 on 13 cents risk. So BEXP, very nice. CCK, we're going to show you that one too. Another gap up. We added in the pre-market, added to our watch list. See the gap up there? Same deal. Called this one on 15s. Consecutive lower highs. Okay, here's the first break of a previous 15s high, 25.43. Worst case stop below the trigger candle at 25.25. That's only 18 cents risk. The stop did not get hit, and from 25.43, this thing ultimately went all the way to 26, again on 18 cents risk. Another example of one we called today, this was Ameritrade, and this was based on our waterfall strategy. This one was just falling off a cliff. See the volume here? And using our waterfall strategy, our entry was 1733, which was right about here in this tail. As it was coming back up, though, stop 9 cents below that, never got hit, and from 1733 it went ultimately to 1782, again on 9 cents risk, and stop never got hit. Another example of one of our calls today, LEG. Nice tight base here with the high of day just to the left. The reason we like that, first of all, I'll show you like a 10-day chart. This thing just fell off a cliff the other day, bounced, and then bounced a little bit more today, and then put in that tight base, and the market was strong too. So now that you've seen a 10-day chart, let me zoom back in on maybe just a 2-day chart. There's that base, and I'll zoom in on today just using 5-minute candles. Nice tight base there. The reason we like that is because we usually don't call a high of day break. Typically those are prone to failure, but you had the earlier high here of 1913 and then a nice tight base. So in this scenario, and it had room again on the 10-day chart, or here's a 5-day chart, even had room after getting killed like this, certainly had some chance to get a little mini short squeeze there if it did break that base to the upside. Okay, so here's today's base again. Normally, again, as I said, we don't like to call a high of day break, but because we knew this had a chance to possibly put in a little mini squeeze there, and the market was strong, we called 1914 right here, the high of day break, with a stop below this tight base. That's why we like the tight base. 1914, worst case stop, 1905, right here below this. Okay, again, 9 cents risk, and from 1914, it did get up to 1945. Not a huge gain, but again, on a very tight stop. And you can see, really within 5 minutes, we were to a break-even stop. Because anytime we get a pop, we like to go to a break-even stop to protect our downside. That's our first priority in our chat room, protecting the downside, and we worry about scaling out and taking profits after that. So first thing we always want to do is try to get to a break-even stop as quickly as we can. All right, I'm going to wrap this up. We will send out another free pick next week. But again, a quick reminder, most of what we do is based on intraday patterns like we teach here, and we call stuff live. So we might have had 8 stocks on our watch list this morning, but we added some in the pre-market, and you know, and then a lot of the stuff we had on watch never did trigger according to our parameters, because we do stalk and wait for these low risk entries that I'm showing you here. And so even though we send out free picks, it's just much better to be in the chat so you can get the alerts in real time. But hopefully from these wrap-up videos, you can learn a little bit about what we look for and hopefully help improve your trading. Have a great night, and we'll talk to you next week.